Corruption is clearly evident in both the political and financial sectors. So today we will discuss how the stock market is rigged. You came here for the truth, so let me unveil that for you. First, I want to begin with this article here, which is in reference to the previous video that I did about the AIIB. Now, initially, Japan said they do not want to join this Asian Infrastructure Investment Bank, but it seems like that could be changing. Let's look at this. Japan is likely to join the AIIB within a few months, according to the country's ambassador to Beijing. Masato Kitera told the Financial Times he agreed with the Japanese business leader's belief that the country would sign up to the China-led development bank by June. This is very big news. Obviously, Japan initially did not want to join up, and the reason they cited was that, of course, they do not want to break those ties they have with their partner, the US. And it seems like this could be changing. Will they wean off of the US as the years go on? It seems like most countries around the world are in fact going in that direction. So right here we have this information, but I would like to move on to the big news of the day. Let's look at this out of the New York Post. Ed Yardeni, a longtime Wall Street guru who isn't one of the clowns of the bunch, said flat out last week that the market was being propped up. These markets are all rigged, and I don't say that critically, I say that factually. This was an interview that he did from CNBC. Now, I've been saying this for quite a while, obviously, but let's look at the things that they talk about in this article here, and you'll see how it is exactly the same situations that I have been discussing here over these years. Yardeni's claim is the most basic one, that the Federal Reserve won't do anything that will upset Wall Street. In fact, it's doing all it can to help the stock market. And then they start getting into how in the Wall Street Journal, which I covered, that the Bank of Japan was aggressively purchasing stock funds. And this is what I've showed you. It is public information. They make it seem like it's a secret, but of course, this is publicly available information. Switzerland is doing the exact same thing. I've discussed it here. And there's more details in this article. I want to move on to this. Phone logs I received, and this is talking about during the financial crisis, showed numerous calls between Treasury Secretary Hank Paulson and Wall Street banks, Goldman Sachs in particular, that seemed to coincide nicely with stock market rallies. That is very interesting information because it goes to show you the deep dark secrets that go on behind the scenes. Then they're talking about how the banks themselves could be in fact doing the business for the government so that they do not get caught doing this. There's another kind of market rigging that's also going on, and this is being done by the companies themselves, and they are aggressively buying back massive quantities of their own shares. Something I've covered here many times before, that the stock buybacks are off the charts right now, and that makes the stocks go up in price. And there's no doubt about that. We could see that clearly with Apple and with other companies, of course. They also discuss in here about the CME group. They are in fact having incentives for other central banks around the world to purchase the shares. And this is something that is public information, is brought out there. I've showed you this before. And that is exactly why these markets are able to be propped up. I want to move on to this article right here. And it is about Goldman Sachs, and it goes on further to basically say that they had a little error in their GDP calculations. So remember, I just showed you recently that they revised it down to 1.2%. But look at this. We made an error in our original estimate of the GDP tracking implications of the February PCE report. We now have reduced our Q1 GDP tracking estimates to 0.8%. We regret the mistake. Sure you do. This is less than 1% on the GDP, even when you factor in all of the garbage that is included here and all of the lies. So this number continues to decline, and it is becoming a little bit frightening for those those in charge, because if it dips into the negative, they're already doing everything they can. And of course, they can simply do what they did with that quarter, where they just used Obamacare to prop it all up. But that can't be withstood here. Let's move on to this. I just want to show you, for those who aren't aware, perhaps you're new to this, what exactly is the GDP? Well, in my book, I have this diagram near the beginning, and it says this: the GDP, gross domestic product, basically it's the total value of the country's economy. And of course, these are simplified terms and little graphics, but I just wanted to show you this. GDP is government spending plus consumption, investments, and exports. And look at the US right now. Do they consume? Well, the fact is that, in fact, they aren't consuming the way that they once did. Their investments are definitely down, except for derivatives, and their exports are hurting in some cases simply because of the strong US dollar right now. That makes them worse off for their exports, not to mention the fact that everything has already been shipped overseas. Now, the government spending is something that has been increasing. So that is a way, in fact, to really calculate this. When you look at it, you have the consumption. The only real consumption is basically individuals spending more on things like Obamacare, and the government spending, which continues to increase. But the real value of the economy is definitely in decline. So these are the numbers that they're showing us of 0.8%, considering that they are able to really manipulate the numbers. Look at this. Will the Fed allow irrational exuberance season 2? You could see all the booms and busts that we've had over the past centuries here. And you can see that the market is considered to be overvalued. And that is no doubt here. Now, of course, depending on how you look at it, you know, I really would disagree in some ways based on this, but there is, you know, this is just one simple indicator. Regardless, it has become too expensive. I believe that in certain instances, it is actually far too expensive, but here we're using price to earnings ratio, and this is, you know, something that you don't want to just look at this one indicator, because the PE ratio is just one of so many. But it still, even though, shows you that they are historically very expensive right now. I'm going to move on to this article out of The Guardian, and we're talking about Brazil. Now, the reason I mention Brazil, because they're really in trouble right now. They had about 200,000 people on the streets protesting just recently, and they are not happy. This started when there was the issues there not too long ago. But let's go into this. We're going to have another financial crisis. Brazil's already in great trouble with the strength of the dollar, and I dread to think what's going to happen to South Africa. Then there's Malaysia, and we're back to where we were. And for me, that is really frightening. And that's from this book, The Coming First World Debt Crisis. Once again, things that I've mentioned many times before. I'll move on. Next to nothing has been done about the question of what to do about the countries that can't repay their debts, or how to stop them getting in trouble in the first place. And that is something that is so obvious. They have no ability to pay back their debt. So what do? Well, they repackage it up, and then they sell it as a product on the market that's rated at AAA, even though it is complete garbage. And then what does that country do once they get rid of that debt? Well, of course, they accumulate more. This is a complete joke. It's a fraud, and eventually the house of cards has to tumble down. Let's look at this out of Bloomberg, and again, we're talking about Brazil. They're talking about their programs that they've been doing in order to limit volatility, but it wasn't enough to keep the Brazilian real from plunging 26% over the past year to the weakest level since 2003. The economy will shrink this year, even as inflation accelerates to the fastest in a decade. So they're in trouble. They are facing what many developed nations will face in the near future. You have a country that is suffering right now. The people are taking to the streets. This is the exact same thing that is going on in Venezuela in many instances, and we will see this take place in the major cities around the world. This is, in fact, a warning. And then this is just some information I wanted to show you. Annual salary of selected world leaders in 2015. You could see Singapore obviously far greater than the rest of the countries here at 1.7 million. And then you see the Emperor Lord Obama, 400,000. Everyone's favorite, Stephen Harper. Then you look at Angela Merkel, and we go down to Japan. And if you look at the very bottom, you have China's leader earning only 22,000. But my assumption is that, you know, these individuals are all making money in other ways as well. But it just goes to show you the disparity in between these countries. Very interesting to note. I'm going to move on quickly here to this. Foreclosure to home free as a 5-year clock expires. So what they're saying is that during the financial crisis, people bought these homes and of course they couldn't afford them. So they began to have to foreclose on their property. But if they just hung on to the property in certain states, they had to wait for a judge to sign off on the foreclosure. But because the court system is so backed up, they haven't got to it yet. So these individuals haven't paid for their mortgage in a total of 5 years now. The judge said apparently that they're not going to get a free home, but this remains to be seen. This is very interesting that the court system being so backed up and inundated with all of this mess that people may in fact be getting a free home out of it. Very interesting to note, and this is all because of the subprime mortgages in the first place. They allowed people to buy homes they simply couldn't afford, they didn't put any money down, and they are able to profit from it. That's all for this video. I hope that you found it informative. If you did, please give me a thumbs up. I truly appreciate that very much. It helps me out to get the word out there to those on YouTube. And if you're not already, I suggest you become an insider because it's where I give out all my best intel for free, and that is available at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.